Hey, Bulls and Bears, what is happening? Thank you for joining in here today. I am recording this on Saturday. Yesterday, Friday, which was February 2nd, I was actually out and had a family birthday to celebrate. But I've got a lot of news to get caught up on here, and we're going to kind of crunch everything into this report today, things that we would have talked about, normally would have talked about yesterday. And some of the biggest news, of course, the bank failure. We did touch on that, I think, in Wednesday and Thursday's report, so you know my opinions on that. But the latest number that's surprising people and shocking people, honestly, is this jobs number. U.S. economy added 353,000 jobs in January. That's almost twice the consensus.
Well, the first month of 2024 saw massive job growth that really outperformed economists' expectations.
That's right. The latest jobs report shows the labor market remains unusually robust in spite of high interest rates and inflation.
So what's going on? Is the economy good? Is the economy bad? Well, it depends on how you look at it, because jobs being added only comes with people digging further into debt. And I know that sounds like a broken record, but that's the reason. That's the story. So if it were a different reason, I would give you different information, but this is the reason. And it's not just me saying that. Let's take a look at some information here today. First of all, why the reported jobs numbers? Let me bring this up here on our screen for you. This is out of CNBC. Non-farm payrolls expanded by 353,000, better than the Dow Jones estimate of 185,000. So that's a blowout. 185,000 expected, 353,000. Now we'll have to see if it's downward revised the next month. Also, you have to look at how many of these jobs were government jobs. And another thing, too, you have to look at the levels of debt. So as long as people can continue to go further into debt and spend money, you'll continue to see job growth. That's the way it works. One person's debt is another person's income, right? One person taking out a loan and going on a spending spree, that's another person's job that they get, because when money's spent, obviously you have to have somebody on the other side for that transaction. Now that's being displaced somewhat because you have automation, you have AI trying to take as many jobs as possible from the working person. And I think in the very near future, you're going to be surprised at a lot of things that are going to be automated. We've covered some of those here on this channel: automated cooks, the burger flipping machines. You now have different types of self-service options for companies where most people go online, do their own payments, do their own balance transfers. You no longer need as many bankers as you used to. We see bank branches closing down by the thousands in 2023. And it's continuing here in 2024, by the way. Branches are closing down, especially in smaller towns, smaller communities. So you might want to ask yourself, if these banks were so sturdy and stable, why are they choosing to close so many branches? By the way, I'm bundled up today. I'm in my garage. I don't have heat in this garage. Yes, I'm in California, but it does get a little bit chilly at night. And I'm recording this kind of early in the morning on Saturday, so I'm a little bit bundled up. So for those of you asking about my, I'm always having a jacket on and stuff like that. Well, let's get into this other news here, and this comes on the heels of what I was just talking about here. Let's bring this up here. Out of bank rate, consumers turn to credit limit increases for additional liquidity as rejection rates drop. So yes, just like I said, people are going further into debt. And if this continues to happen, you're going to see continued job growth. You're not going to see unemployment spike, and you're not going to see the cost of living come down, because the more people have money to spend, even borrowed money, even money on a credit card, with credit limit increases being the reason behind this increase in spending, you'll continue to see more of the same. And out of bank rate here, while the approval rate for new credit cards dipped in 2023, issuers were more inclined to approve applications for higher credit limits. Now, the reason the approval rate declined, I think you have a lot more people than usual applying for credit cards. Look at all the new people coming to the country. Look at the migrant situation, and you'll see that there's a lot of new people here applying for credit cards, trying to get loans, trying to do what they need to do to get by. So that's why the rejection rate's higher, I think. But when you look at the number of people that already have approved credit cards, the credit limits are increasing. And that goes right along with the increased amount of spending, people going further into debt, right? So it should be no mystery. I mean, when you look at the business news channels, they were shocked at the jobs numbers. And we're going to get more into the reason behind the high jobs number in a minute. But a big part of it is spending. People can still spend because banks are not holding back on the amount of credit that they're giving out to people with their credit cards. And real quick, another bullet point out of this article, quote, higher credit card limits provide additional spending power to consumers who are feeling hard pressed to make ends meet. So let me ask you, what happens when the credit limits aren't increased? So we don't even have to see a drop in the credit limits on these credit cards to see big trouble emerge. We just have to have the increases stop. And with all the problems going on with the banks, you have to wonder what's going on behind the scenes where banks feel confident enough to keep increasing these credit limits, right? More people not paying off their credit in full each month. Normally, that would be a big red flag. Normally, if you had banks that were worried about not being covered, you would have banks dropping credit limits in this type of environment. But banks are not doing that. You might want to ask yourself that question. Why is that? Well, because we have an election year. We have, of course, people that want to make the economy look as good as possible to get through the year. Will they be able to keep it up? Well, we'll have to see. We'll have to find out. No one can say exactly what's going to go on behind the scenes, how much the banks are going to be liquefied. We know that the Fed, they're already talking about rate cuts coming up this year. They're talking about 5 or 6 rate cuts, and we have this bank emergency funding program that's supposed to end in March. And could the rate cuts be the reason why they're doing that, right? Or could that be the reason why they're doing the rate cuts, right? So let's bring up this article. Most of you know about this. I just wanted to remind people that this could possibly be coming up in March. I'll bring it up here. The Fed to allow emergency bank lending program to expire March 11th. So far, and here we are in early February, so far that's still what they're sticking with. And I'll be very surprised if they end up allowing this emergency program to expire. But could this expiring be the reason why they're talking about rate cuts? Because maybe they want to offset some of the carnage that's going to be taking place. Because if this expires, that's going to be a whole new ballgame for the banks. And maybe they have something else lined up. They could very well have something else lined up behind the scenes that they haven't even revealed to the public. I mean, if you think that everything happening right now with the banks, if you think that everything is transparent and that everything that's happening is given to us as the public, I think you'd be very surprised that a lot of the information and a lot of the programs and a lot of the systems that are in place behind the scenes to keep everything propped up here, even with this massive level of debt that we're seeing. Some other information I want to get into today. This is going to be a little bit of a different topic, but I think I need to start talking about this more because there are people out there that seem to think that everything's fine with people in the quote top 10%. Celebrities, people think that celebrities are just on top of the world. Some of them are, many of them are. But even people that have had their own talk shows, look at this. Wendy Williams reveals health and financial struggles in shocking Lifetime documentary trailer. She quotes, "I have no money. I have no money." So this is a celebrity that had her own talk show. I haven't actually watched the whole episode, but I've seen it on the TV, flipping through the channels. And it's not just the middle class people. It's people that you would think are very rich and famous. A lot of times that's not the situation, and you see a lot of high profile bankruptcies actually occur, and that's natural in an economy and in a country. We have just an enormous high cost of living. You have to keep hustling, keep working, keep working. Why do you think so many actors are working into their 70s, 80s, 90s? A lot of them, they look wealthy on paper, but if they stop working for a couple years, you have all these ongoing expenses that never get paid off. Taxes, home maintenance, upkeep, insurance costs, everything else that never stops. Utility bills never stop. You have a relative that passes away, they don't have life insurance. You're going to be covering a funeral. What are funerals cost now? $5, $10, $20,000. I mean, the last time I checked, it was in at least tens of thousands for a decent funeral at at a cemetery with a ceremony and all that stuff. So things that never get paid off, that's a big problem. All right, now back to this Wendy Williams story for just a minute. It was pretty interesting. There's a lot more to the picture than just the cost of living. She had family members that tried to scam her and steal money from her, so she says. So if you want to read up on that, check it out if you're into the celebrity gossip thing. But I think it's very important to look at people that we perceive as being successful, wealthy, and seeing what their financial situation really is. I mean, of course, there's a lot of multimillionaire actors and celebrities out there, but they live in the same system we live in. They have to pay the expenses we pay. Of course, they have a lot more money. But some of these people are getting walloped with back due taxes, things like that. I just read about a former member of the band Kiss. Kiss, a huge band. A guy named Ace Frehley. He owes apparently hundreds of thousands of dollars in back taxes, right? So things aren't always what they seem on the surface, is what I'm getting at here. And that's not just true for celebrities, but with people too. You see somebody in a nice car, people automatically think there's somebody that's successful. A lot of times it's tons and tons of debt in the background. And a lot of people don't mind being in debt. If it gives you a nicer lifestyle, a nicer, luxurious way to live, then to some people, taking on debt is a small price to live, a more luxurious life and to travel and do all those fun things. Also, maybe some of you can explain this. Let me bring up this headline here. The job market, if it's so strong, why did layoffs double in January? Some of the companies listed here: UPS, Citi, Google, eBay, BlackRock, Macy's, Salesforce. I mean, the list goes on and on. From December to January, layoffs doubled, but yet we're told that we're only supposed to look at the jobs added number. And back to the jobs added number, keep in mind, a lot of these are part-time jobs. A lot of these are temporary jobs. Remember, some of these jobs are still lingering over from the holidays, where you had holiday help being hired. So people taking on second jobs, third jobs, 2 part-time jobs, gig economy jobs, those are all factored into the number. Also, another reminder, if the U.S. consumer was doing so well, or doing as well as we're being told, why do we see rents take the biggest drop in over 3 years, right? As those rescue programs expired, the rent moratoriums, other types of rescue programs, as they expired, we saw an uptick in evictions, and now rents are finally starting to price in some of the weakness coming out of the rental market, or some of the consumers that just don't have the monthly cash flow in order to keep paying these higher and higher rents. So rents posted the biggest decline in 3 years. Redfin's reporting that. I saw that on CNBC and some other publications. Bloomberg was talking about that as well. And I am still bullish. I still think they're going to be trying to push these markets higher. We still have a lot of businesses, companies buying their own stock buybacks. We still have a lot of big money out there able to bid these prices up at the click of a mouse. And a lot of these same people are getting nice dividend payouts for these stocks. We're also seeing a lot of selling, though, from a lot of the big money people. So you do want to be cautious, in this environment. But let's take a look at something that could really bring these markets down, and that's the escalation of some of these conflicts that we have going on here. Recent report here: U.S. launches retaliatory strikes in Iraq and Syria. Numerous people taken out. And this is something I said here from the very beginning, back the beginning of 2023, when we started seeing what's happening over in Europe. I said this is going to escalate. This is going to escalate. When all else fails, they take you to war. So when war breaks out and when it hits the U.S. shores, a lot of people are going to be so concerned about their own safety that the economy and everything else, that we talk about here in this channel may take a back seat to what I think is going to be some pretty devastating things here to hit the shore. Look at all the enemies we're making. A lot of this is because of these countries are de-dollarizing. Of course, they're not going to come out and say that. But we have troops over in these other countries. There's going to be casualties. So now they're using the fact that some of our troops got taken out to take out more people from these other countries, right? So it's going to escalate. It's going to get worse. And, this is something that you can't really say for sure next week, next month. But when things are escalating, you might just want to brace yourself for something in the very near future to rock to rattle these markets. When something big enough happens, then markets will sell off. I mean, yeah, the markets are manipulated, but when you see something big happen, look at 2020 with the global health crisis. Markets came down. That was a great time to go in and buy the dip because they pushed markets right back up. Just several weeks, short weeks later, the market was on its way back up and had hit highs from higher than what they were before the pandemic. They went on to march to new highs in just a few short months, right? So pretty insane the level of propping up, manipulation, liquidity that can be injected into the system. And until you start seeing the national debt drop, which some people say that'll never happen, then you may not see much deflation happening. But there are some bubbles that are deflating right now. Automobile prices weak, home prices weak. We're going to keep an eye on it here for you. We're going to wrap this one up here. So everybody, thank you for watching today. Hope you're having a good weekend. Hopefully it's not too rainy. Hopefully you're not getting flooded. A person I work with got flooded and didn't have flood insurance, right? So if you didn't lose your home without insurance, then you're having a better day than some people. Just remember that, and try to keep your head above water. No pun intended there. Everybody, thanks for watching. Keep stacking. Bye for now. Peace.